Hello there. Over the last week or so, gold price has rallied by about 2 or 3%, and already we see some impatient traders calling for new all-time highs. Well, I do think that in the very short term, patience might actually reward you in precious metals. So let's jump into the details. And as usual, I would like to start with the US dollar. Based on this very small correction down into late January, early February, depending on whether we have seen the daily cycle low in the US dollar, there are a couple of scenarios. The most likely scenario is that the daily cycle on the US dollar is still continuing. And perhaps we've seen the end of it on the 22nd of February with the daily cycle lasting for 56 days, or we might see the daily cycle ending anywhere within this circle roughly over the next few days. That would be a cycle lasting close to an average duration. These cycles on the US dollar usually last for around a couple of months. And that would be our first daily cycle out of this relatively new intermediate cycle in the US dollar, which would be followed by the second bounce into that second daily cycle, most likely giving us the top for the ongoing intermediate cycle and a bit of a head and shoulders formation over the next few months. I would give this scenario 60% chance, and there's probably only 40% chance that we have actually seen the end of the daily cycle at the very beginning of February, with the daily cycle lasting for only 36 days. That is possible, although not extremely likely. In that case, the dollar is already in the second daily cycle, which has probably already topped, meaning that it might actually continue down for another couple of weeks before we see another bounce into the third daily cycle of this ongoing intermediate cycle. I would give this scenario perhaps 40% chance. The corresponding scenarios for gold price, starting with the first scenario with a 60% chance probability, we might actually see a bit of a correction down into the intermediate cycle low. In that case, the intermediate cycle would be going on for 144 days by now. Usually these cycles last for around a half a year or so, so extending this cycle sometime into the second half of March would imply a cycle that is pretty close to the average duration. Again, these intermediate cycles usually last for around a half a year. After that, we would see a bounce into a new intermediate cycle, clearly buying somewhere around this 200-day moving average or slightly below that would be a nice buying opportunity into that rally of this new intermediate cycle, which perhaps over the next couple of months might actually bring gold to new all-time highs. I would give this scenario 60% chance. And a slightly less likely scenario, but again, one that you might want to consider and plan for, is that maybe we have seen the intermediate cycle low on the 14th of February, implying a relatively short intermediate cycle lasting for only 131 days. That is possible, although not extremely likely. In that case, gold will continue higher from here as the new daily and intermediate cycles are still relatively young. So if you don't have any positions in precious metals, you might give gold maybe a bit of a chance with a relatively limited sized position. For example, as the members at myfinancesteacher.org know, near those recent lows I entered GLD. Again, the positions aren't that big, but once I am convinced that we're ready to bounce into a new intermediate cycle, that's when I will increase the exposure to precious metals and move into something that has more leverage to gold price. Next, let's have a look at another very important sign for possible cycle lows, market sentiment. Remember, you might want to consider buying when this proverbial blood is on the streets, when everybody wants to sell this asset. So we gotta look at market sentiment. This is gold optimism index in front of us. And beyond these intermediate cycles that usually last for around half a year, there are longer term fluctuations in market sentiment. There are hard times, as we see over here throughout 2018 and the first half of 2019. That's when the intermediate cycle lows are accompanied by this optics well below the level of 40, perhaps somewhere around the level of 30 or even below that. On the opposite side of these longer term fluctuations are the good times, as in the second half of 2019 all through 2020 and 2021. The good times are when intermediate cycle lows are accompanied by this optimism index dropping down to just somewhere around the level of 50, perhaps even slightly above 50. We see a bit of a repeat of the hard times in the second half of 2022. Early 2023, there is a dip below 40 with this intermediate cycle low, another dip below 40 in the second half of 2023. Currently though, if we zoom in, the most recent low came at the level of 50 without dipping below the level of 50, never mind below the level of 40. And unless we are ready to enter the good times now without one more dip, at least a little bit below that level of 50, it looks to me that, again, the more likely scenario is one more short-term drop down into that intermediate cycle low before another strong rally takes place. Although, again, as I mentioned, you might want to have at least some allocation to precious metals, as there is a chance we are entering a good time already, and gold just continues higher from here into a new intermediate cycle that started all the way back in mid-February. So the way that the market sentiment looks like at the moment does agree with a couple of the scenarios I presented. Moving on to seasonality on gold, again, it doesn't disagree with our scenarios. Usually we do see a bit of a dip down into mid-March. And remember those pandemic lows in 2020, we saw a significant drop in March. If we remove 2020, we still see that sometime into early March, gold does tend to be relatively soft before bouncing quite noticeably into mid-April. So yes, there will be a rally relatively soon, but perhaps a patient investor might be able to take advantage of that last dip down into the end of this ongoing intermediate cycle. And to learn more on patience, as well as using data for your trades rather than your emotions, rather than chasing the markets. For all that, join us at myfinancesteacher.org. You'll learn a lot more on other assets as well. For example, once gold is ready to give us new all-time highs, it's the juniors that are going to give that additional torque to your portfolio, rocketing higher out of extremely oversold conditions right now. And for the review of some of the most promising juniors, join us at myfinancesteacher.org. Talking about these oversold, undervalued miners, let's have a look at this chart. The bottom chart is simply GDX. The top chart is the ratio of gold price to GDX, meaning that whenever this blue line is extremely high, that's when GDX is undervalued relative to the price of gold. Currently, you see that we are quite high on this blue line. Again, GDX is quite cheap compared to gold price itself. And historically, all the way since 2006, there has only been two more times when the miners were more undervalued than they are right now. Once over here at the end of 2015, that was the end of the long bear market in precious metals. And once over here, a quick tip, that was the pandemic black swan. Correspondingly, whenever GDX is undervalued relative to gold price, now looking at GDX, that's when it is generally a good idea to take a position in these miners. We see a strong rally into 2016 out of these undervalued conditions, historically high peaks in late 2015. With this pandemic dip, we see a significant rally out of that dip again with this historically high peak on the blue line, and we are currently pretty close to those historic peaks. So to summarize the video in one sentence, you do want to have a position, but there is a likelihood of one more chance to scoop up the cheaper metals as they temporarily drop into that intermediate cycle low relatively soon. And again, for much more details on a range of assets, as well as data-driven approach to your trades, make sure to join us at myfinancesteacher.org. Do it now. Have a terrific Tuesday. Bye-bye.